All right, today we are diving into one of the wildest, boldest claims you'll hear in the entire crypto space. The idea that a single XRP coin could actually rocket all the way up to $1,000. Now I know, it sounds absolutely insane, but there's a really detailed case behind it, and that's what we're here to deconstruct.
So right off the bat, you've got to ask yourself, is a four-figure price tag for XRP just pure fantasy? Or is there an actual plausible path to get there, even if it's a long shot?
Well, one YouTube channel, Journey to XRP, has laid out a super detailed argument for exactly that. Now look, our job here isn't to tell you if they're right or wrong, not at all. We're simply here to explain the case they're making piece by piece. So let's get into it.
Okay, so first things first. We need to really wrap our heads around the core claim. What's the fundamental theory that could possibly prop up such a gigantic price target?
The whole argument really hinges on this idea they call a classic squeeze. And it's not just one thing. Think of it more like a perfect storm, where three massive forces all converge at once. Huge shifts in the global economy, the arrival of some very serious, very powerful old money, and a deliberate, strategic plan by Ripple itself to basically choke the supply and crank up the demand.
So what's going on in the wider world that could even begin to make this possible? Well, according to this theory, the global market is sitting at a really critical fork in the road.
The way they see it, it's like we're standing on a knife's edge between two completely different economic realities. On one side, you have all this global tension, trade wars, political instability, which makes investors nervous, and they pull their money out of risky stuff. But on the other side, you have global easing. Things calm down, deals get made, and all that money starts flowing back into higher risk, higher reward assets. And the argument is that crypto, especially XRP, would be a massive beneficiary if we tip toward that risk-on world.
And they're not just being vague either. They point to some very specific things that could flip the switch. A big trade deal between the US and China, an end to government shutdowns, China relaxing its export rules. The idea is that any one of these could be the green light that sends the markets and assets like XRP into overdrive.
All right, let's move on to the next piece of the puzzle. The idea that some really established, powerful financial families, what people call old money, are getting involved behind the scenes.
So the source really zeroes in on the Mellon family, who are heirs to this massive banking fortune. You might have heard the story about Matthew Mellon's early bet. He supposedly turned a $2 million investment into a mind-blowing $1 billion. And it seems like that interest is still there, with Timothy Mellon recently making a huge $130 million play in the financial world. And this is where they pull out this really interesting historical comparison. The quote sums it up perfectly. When old, established money gets behind brand new technology, markets tend to just explode. I mean, think about the early investors in the internet, right? The argument here is that we're seeing that exact same story play out right now with crypto.
Okay, this brings us to what might be the most crucial part of the whole argument, Ripple's own corporate strategy. The claim here is that the company is actively, deliberately engineering a scenario to shrink the available supply of XRP while simultaneously creating overwhelming demand for it.
So the source lays out this whole strategy almost like a four-step playbook. Step 1. Control the supply with those managed monthly releases so you don't flood the market. Step 2. Go out and buy up key pieces of financial infrastructure. Step 3. Use those companies to weave XRP deep into the existing banking system. And finally, Step 4. Sit back and watch the demand pour in from new financial products that need XRP to function.
And when they talk about acquisitions, they're not talking about small fish. They highlight two big ones. A company called G-Treasury, which handles final payment settlements for thousands of institutions, and Hidden Road, which is the biggest U.S. prime broker that isn't a major bank. The point is, these aren't just random business deals. They're seen as calculated moves to install XRP into the very plumbing of global finance.
And just to give you a sense of scale here, that first company, G-Treasury, it handles $12 trillion in transactions every single year. That's the kind of volume we're talking about. It's just massive.
And it doesn't stop there. The second company, Hidden Road, clears over $3 trillion a year. These numbers are just staggering, and they're used to argue that Ripple is setting up XRP to be the rails for an unbelievable amount of institutional money.
So, what's the final domino to fall in this whole squeeze scenario? Well, it's the ETF, the exchange-traded fund, and specifically spot ETFs, which would actually hold real XRP. With several of these supposedly in the pipeline for approval, the theory goes that the floodgates are about to open for huge money from retirement funds, from hedge funds, all these big players who need an easy, regulated way to buy in. This, they say, is the ultimate catalyst for demand.
Okay, so if you're an investor and you're buying into this whole story, what's the game plan? How are you supposed to navigate this potential future?
Well, according to the source, it's all about mindset. It's about being patient, getting disciplined, and not getting shaken out by all the ups and downs. They stress having other sources of income so you're not forced to sell at the wrong time. It's about being smart with leverage and, maybe most importantly, always remembering the big picture, that you're not just betting on a coin, you're investing in a whole new financial infrastructure.
And they really wrap up their whole argument with this one powerful idea. They're basically saying that if you're looking at today's price, you're missing the forest for the trees. In their view, the current price isn't the destination, it's the price of admission. It's your ticket to get in on what they believe is the ground floor of a massive financial shift.
And so that's where we're left. You've heard the case. Is this a legitimate blueprint for a financial revolution built on solid strategy and global economics? Or is it just a really, really compelling story, a masterclass in building speculative hype? The argument has been made, and now the conclusion, well, that's up to you.